you guys go. A little bit of what we've been missing here on the internet, or definitely on my show and other shows, particularly a lack of technical analysis. I decided to go ahead and do a little bit of that myself. Welcome to Stock Review. It is 1/28/19. Have gotten rid of the rattling papers and definitely got some interesting stuff here. I'm going to start with CNY first right off the bat. Right off the bat. And at the end of the show, I want to explain to people why it is important to do your due diligence. It really is. I mean, once you start looking at these charts and start understanding what they are, what they mean, a lot of the rhetoric that you hear is really just, you know what I mean? It's a bunch of bull, definitely. I had already been doing pretty detailed market analysis, but really lacking on the technical analysis, and been doing pretty good without these certain charts. But now I can sort of like tune in what I'm doing, and takes out a lot of the guesswork. But number one, this is CNY renminbi market vectors here, and you're looking at the MAC D chart, and CNY is definitely lagging. As you can see here, it's at 44.80. Its breakout point is 45.02. I put my stop loss at 43.98. Its 52-week high is just under $50 at 49.16. I'm long on CNY according to the KDJ. It's not time to sell. Let's go switch over right here. If you've read the information that was in front of the video, you'll see that none of these lines are converging at the end of trading on the 25th there. So that's not a sell or buy indicator either way. So it's not time to sell, even though, you know, that was the case earlier on the 19th and the 20th of January, which you could go back a little bit in between there and see. I'm expecting the ETN to strike its all-time high due to market trends. According to the MAC D, the stock should reach its horizon in March, sometime in March. If we can toggle over to that, I'll show you what I'm talking about. Right. It's the 25th, but if we take this chart back a little bit, you will see, get this thing to work. Max minute monthly. Let me February. So if you look at this in February, um, in 18, I'll take the cursor over here. About here, you see it's peaked right there. So I'm expecting that to happen again. It's following the trend pretty closely, and all these stocks do this. So that's what I mean by, totally just getting past the BS on a lot of this political stuff these people are talking. Definitely. Things look pretty normal in the stock market. I mean, overall, within 10-20%, I mean, it's the same stuff. Same thing here with Deutsche Bank. We go to MAC D right away. Let's do KDJ then. The KDJ is showing a sell signal in the short term at 924 plus 3800s plus 4.29%. I'm long with earnings expected on the second. On the 1st of February. I'm holding out for the 52-week high at it's at 1929. Last Thursday, the stock peaked at 933. It closed at 924 on Friday at the end of the trading day. As you can see, the KDJ falls off of the chart, telling me that other factors are affecting Deutsche Bank stock, according to the MAC D. We'll switch over to MAC D right now. Deutsche Bank is going higher on the long. After earnings, I'll think about what to do next. I entered the position that it's low, so I don't have a stop loss for this particular stock. I'm pretty confident that it's going to perform for me. Correction here real quick, guys. Anyways, talking about Deutsche Bank, if you look at the long term, the MAC D, there's no worries with this guy. I mean, there's no worries with it. I mean, you're seeing a few swings here on the 23rd. Here, let's go monthly. This is what I wanted to show you right here. 07, and this is 08 right here. Let me bring the cursor over here. This is what we're looking at here. This is when Deutsche Bank really took a tank and stayed there. It's about time for it to recover. I mean, totally. Through 16. Now we want to move to the weekly. Once you start looking at these long-term statistics here, I mean, it really puts a lot of things in perspective. This is on the 25th here. This is when Deutsche Bank woke up from a long slumber right there. Came up, came back down, This is when I noticed it was alive again and bought in before this. Yeah, I expect it to. We'll see what happens after earnings, like I just said. Definitely. Let's go to DRV. The thorn in my side, really. As you can see, I am negative 33 cents on a share right here. Wish I had a MAC D back then when I bought that. Let's go ahead and do what we need to do. So I bought a little bit high, but because of the real estate market not really doing too well, the retail real estate market not doing well at all, I'm not too worried. Let's go to D, or at this time the K and the D, or KD and the J are converging, meaning buy DRV right now. I bought at $9. As you can see, I'm sort of down a little bit. According to the MAC D, which we'll switch over to the MAC D real quick. This stock is oversold, just like Deutsche Bank. The convergence is below the overall market trend. With bad news in the retail real estate front, DRV is positioned to go much higher in the higher in the short term and the long term, depending on the dollar index. Let me scroll down a little bit more. We will get into my other favorite friends here. Okay, OILK, ProShares K, free crude oil. So let's open this one up. Boom. This is one of the few stocks that opens up with a MAC D. If you don't mind. According to the MAC D, oil baths are going through its normal cycle, moving upward at the end of trading. The KDJ is dropping off with no convergence to speak of. The 52-week low is 16.35 and the high is 28.82. My position at this time is 1970. Take a look at this. Right. That would be about right. I'm holding definitely for higher oil prices as the dollar decreases, as the dollar is suppressed, in order to hide inflation, along with people hiding out in the bond market because of uncertainty of a so-called trade war. That rolls me over into the VIX, which I sheltered in last week. Probably stayed in. I don't know if I stayed in too long. I haven't determined that yet, but I'm sort of feeling that way. Okay, VIX. Looking at the MACD, the long-term average and the short are real close. That tells me one thing. The attack on the current administration is very covert, and it's definitely taking advantage of people who don't look into things. The stock market is in a normal trend. Nothing drastic is occurring, even with a so-called trade war. And this is my opinion. There is no trade war. There's just taxes on the working class done in a covert way, and China gets the blame. Totally is what I get by looking at this. From what I understand how a MACD works, you have long-term average, short-term average, pretty much the same. Now as we move out from daily, you're going to see the same thing. Not that much difference. Weekly. There's a small difference here in the drop in the VIX right here in November 2016. But pretty much it's on a straight path, It's pretty much correlating with what's going on right now, except for, 2010, right? 2011. Then from there, it's been a steady climb up. Now you got every drop, you have a swing back to the high. So, as far as a long-term bull market or a long-term bull or bear market, I can tell you right now, I'm not seeing it. I'm not seeing anything but a stock market going up, but in a controlled ascent. If there's any real descent that's going to occur, or any measure, it's going to be uncontrolled. Anyways, this is Stock Review. I appreciate your time. I know this was informative. These are the applications. Definitely, this is the technical analysis, the market analysis. I'll go ahead and roll something else in here for you guys. Take a look at things that I'm looking at. Definitely. Beer of the week. Stone IPA. Last week it was Arrogant Bastard Ale. Everybody liked Arrogant Bastard Ale. They didn't like this. I like it. So, more for me, right? Okay. This is a colleague of mine. Came up with Vodafone. And we'll take a look at this. The 52-week is 32. It's at 18.14 right now. The low is 17, so it's pretty low, right? It's buy signal, I can tell you that much. It's headquartered in the United Kingdom. Like I said, my colleague came up with that one. Communications. I really wanted to go into, hold on, wholesale. By the way, this is my real calculator. This is where I do a lot of, where I store a lot of my, this is my main watch list. I love Seeking Alpha. It's P, Tech, US Oil, asset lending. These are payday loans, Home Depot credit cards, department store credit cards, things like this. I think we spoke about these before. Hold on. Synchrony Financial, same thing. Definitely watching these. This is mainly what I'm interested in right now as far as a new acquisition, a new asset. 52-week high is 40.59, low is 21.78. It's now at 29 SYF. So let me put it in a calculator real quick. Okay, Synchrony Financial right now, I would say, according to the MAC D, was a buy mid-market. We'll see if it crosses streams or crosses convergence again. So the KDJ is talking. KDJ is talking about buy now too. So definitely at 29.79. It's a quarter through its horizon cycle, or horizon is a cycle. You can still buy, you can still make money. This would have been someone that had a lot of insight on what was going on to get it any earlier than where it is now. We could go through these stocks all day with these charts. I love it. I love it a lot. Anyways, like I was trying to close out, these are the applications. This is the technical analysis. This is the market analysis, commentary, a little bit of information in the beginning. You guys have a happy trading day here on Monday the 28th. I'm signing off. Thank you for tuning in.